Good morning, Armor Insiders, and welcome to the beginning of a holiday shortened week. Thank you guys for spending your time with me this morning and every morning. Hope you guys had a wonderful weekend. So let's go over our virtual hedge fund. It's an orchestra. We have 4 sections in the orchestra. When we make them all play together, absolute harmony. Rely too much on one section of that orchestra, notes can get sour. So that's my message for this morning. We're going to go over all of our 4 segments of our virtual hedge fund. And you got to figure out your risk tolerance goal, what your strategy is, be the smart money, and make them work in unison. You know, you're the maestro, as it were. So last week, let's just go over first our macro picture, what the algos are saying. We're max long right now. Market's gapping up Monday morning. It's great. We're in managed success mode. Not a lot to have to do from here. We'll be day trading. That's part of our orchestra. We'll talk about macro right now to get started, which is our what do the indexes look like and how do we take advantage of that? And then we have Armor Special and Armor Invest. So innovative growth and fallen angel, blue chip, dividend, turnaround type of stories. Those are our basic investment strategies. So without further ado, Risk Monitor went green. That's what the dark color is here. Risk Monitor goes green during the Trump Republican victory. It rips higher at the end of the week, and I'm not willing to put money to work at the end of the week. I say to you guys, it's got to pull back, get rid of the VIX crush, and then maybe we'll get a shot. We got a shot last week. Comes right down to the 25-day moving average and the stop. And the takeaway from last week that I want to share with you guys, day trading, swing trading, whenever you're investing, I don't know about you, but one of the hardest things for me is that moment of pulling the trigger and putting capital at risk. I don't like taking risk. I'm a risk adverse guy, that's my personality. All right. And that's tough when you're managing money because you got to take risk every single time you put money to work. So how do you get past your inertia? Because there's always noise around you why you shouldn't do it. Shouldn't do it for that reason, shouldn't do it. I mean, there's always something. How do you get past that? For me, the key that unlocks the treasure chest is identifying the key location where reward is worth risk. I've already done my research. I already have the idea on my whiteboard. I already have the algorithms created. So that day, that moment, that hour, that minute, that second where you're putting capital to work, the way to execute correctly is to quiet all the noise. Say, I've already done all the work. We're at the location. We're closest to the stop. I'm willing to lose that money from here to the stop. I already done. In my mind, I've already lost it. Put the money to work, and I expect that. Anything else is gravy. So I don't relive that loss twice. If it goes down and hits the stop, that's acceptable. I already knew that was going to happen. That was a probability. I can accept it. As soon as you can get your mind in that moment, when you can get your mind right there, it becomes very easy to execute. I've done the research. We're at the location. We have the algo buy trigger. Put the money to work. Hits the stop. That's going to happen. Certain percentage of our trades are going to hit the stop. Some of our investments will hit a stop. That's part of the game. The idea is to get out of those positions as fast as you can and ride your winners. And that's how you have a big year, which is what we're working on right now. So loading up last week, Not really a hard thing to do. Market at the moment is doing exactly what I would expect it to do. There was a news event that blew it out. We don't chase. It comes right to test the low of that blowout day, the tail of that day. That's the key support. Holds long by the end of the week. Had a good week, and the market's gapping up this morning, and we don't have to chase anything. Good time of year. This is the right time of year to put money to work. I'm not surprised the risk monitor is green. Into a holiday shortened week, Thanksgiving this week, then into Christmas, the end of the year. When you've got a bull market that's had a big year, it's not that it can't go down late November, December, but it's rare. It's just rare. The real danger is the first week of January. Right now, everyone's just marking up their portfolios, institutions. Individuals aren't taking gains. They don't want to pay taxes on them. Market melts up. Market melts up. Market just drifts higher. Market goes sideways. There's not a lot of risk unless, that's the base case scenario. I'm sharing base case scenario with you. It's not a prediction. It's a base case scenario. So we understand if something else is going on. You see what I'm saying? Like, it's not a prediction. That's just a base case scenario. This is what I expect to happen. The algos are in alignment. It's the right time of year. It's a huge bull market. Generally, markets drift higher or melt up into the end of these types of years. If that starts to not happen, we have to read and react to that. Something's wrong with the market. You see what I'm saying? But right now, this is just classic. So let's move on to highlighted stock of the day. I would like to highlight Bug. Okay? I'd like to highlight Bug, which is the ETF of cybersecurity stocks. We added last week 3 of my favorite cybersec names: CrowdStrike, DataDog, and Cloudflare. I submit to you that in some portfolios, if I'm more conservative, I wasn't paying up for those names. What I'll do is use other tools and assets to get the exposure I want. So what I'm sharing with you this morning is the weekly chart of Bug. The weekly chart of the ETF for cybersecurity stocks. No, I don't want to buy Hack. Go look at the top 10 names in Hack, and then look at the top 10 names in Bug. Bug is a pure play on cybersecurity. Hack, I don't know what they're doing. They own a bunch of defense stocks. Their biggest position is AVGO. So they're bastardizing what they're doing, and they're kind of lying to investors. Okay? That's not cybersecurity stocks. When your biggest position is a semiconductor stock, you've bastardized your ETF. So I have no interest in that ETF. Okay? But if you look at the top 10 names of Bug, they're all cybersecurity stocks. Fortinet is at the top. Palo Alto is at the top. CrowdStrike is in there. That's what I want. Okay? So for a portfolio where I might be more conservative and I haven't bought the 3 names that I'm buying, I'm going to be adding this to the portfolio. That's a classic weekly cup and handle on the entire cybersecurity space with the leaders blowing out. Here's a bonus highlighted stock that I think we need to do research on, ASAP. And any Armor Insider who has a thought here and wants to share it with me, I'd love to hear it because I'm behind on this story. But is it time for us to look at ACHR Aviation? I was doing some research this weekend. I looked at the chart pattern, and I've been thinking it's kind of a silly idea for a long time. But that chart pattern makes me think I'm missing something. That's not a silly idea, and anything under 7 is a win on that. So I got to do some research on this. I don't want to spend too much time on it this morning, but I wanted to share with you guys that that's the pattern that turns me on. We're in a market where small caps are blowing out. And this is an interesting concept idea. They're burning through cash and they have no revenue. So, word to the wise. Everybody have a great trading session. And remember, at the end of the day, be the smart money.